Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in the lower part of yesterday's range. And now heading into the open, the main question is whether the weakness that we saw yesterday is going to continue or are buyers going to step in and the recent strength is going to remain in play. So as we head into the open, our short-term bias will continue to be neutral. And early in the session, how the market behaves at the 41.3075 to 37.75 initial resistance is going to help us determine the intraday bias. If the weakness from yesterday is going to remain in play, then ideally we want to see the market holding below initial resistance. And holding below that area would still leave the door open for downside continuation. And on the downside, a break below the 41.17 to 19 pre-market support would serve as a warning sign, and a breakdown below 41.10 to 14 would provide us with an intraday bearish indication, which can then lead to a test of the 40.95 to 41.03 initial support, and that is the intraday bias confirming zone, and we will need to see a breakdown below that area in order for us to get an intraday bearish confirmation. And in order for the market to break and hold below initial support, we will need to see signs of initiative selling in real time. So in order for us to really get a strong downside move, we will need to see continued broad market weakness and some decent and sustained downside momentum, along with the other markets also heading lower. Now, in order for that downside scenario to play out, we will need to first break the pre-market support zones, and then in order to really accelerate to the downside and get a bigger move, we will also need to take out initial support with signs of initiative selling in real time. On the upside, a breakout above initial resistance on broad market strength would serve as an intraday bullish indication, and as long as that breakout is happening on some decent and sustained upside momentum, we could get upside range expansion into 41.4275 to 46.75, as well as 41.54 quarter to 64 quarter. And even though sellers may be active on first test of 41.4275 to 46.75, we will need to assess the real-time situation to determine whether it's worthwhile to take a short setup there. Because if the market is putting in a proper breakout above initial resistance, and in real time we are seeing clear signs of strength and upside momentum, then remember that holding above initial resistance makes the intraday bias bullish, and if the underlying internals are also signaling bullishness, then the next better area of resistance is up at 41.54 quarter to 64 quarter. Sellers are likely to defend there on first test, and a break above that area would serve as a bullish indication on a slightly larger time frame, and that can then lead to a test of the 41.71.75 previous swing high from April 4th and 41.74.75 to 83.75 area, where again sellers can still be active, and that is a short-term bias confirming zone. And by that point in time, the market would also be exhausting the range potential of the day. So again, our short-term bias continues to be neutral, so we really have to be open to the market moving in either direction, and we will have to assess the real-time situation to determine which side is in control, and early off the open, how the market behaves at the initial resistance zone is going to be very telling, and that if the recent weakness is to continue, we need to take out the pre-market support areas. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the initial resistance zone. That's going to help us determine our intraday bias, and we'll take it from there.